hello. How's it going, everybody? Thank you for joining me today, 8 o'clock Eastern Standard Time on this Tuesday morning. Looks like it's going to be a nice, sunny, bright, beautiful day again today. And we got some CFTC data to take a look at today. So I thought it'd be a good time to check in with you guys and go through the latest set of data that I've captured. It was released July 15, 2025. That was this past Tuesday. Well, not released, but collected on Tuesday and released this past Friday, as you know. So we're going to go through the data. We're going to look at what the positions are, what the banks are doing with their positions, and see if it could be of any help to us in determining where price is going to go in the near future. All right. So let's get into it and see what we can see. All right. Beautiful. Okay. All right. So here's the snapshot. We always like to start at the snapshot. How's it going, everybody? Big Bull from Pakistan. Beautiful. Atif, James, Tall Cake, Yummy. That's a wonderful name. Tall Cake, Yummy. Thanks for joining me, guys. Always a pleasure to see you guys. All right, so let's see what we can get out of this data. So here's a snapshot of the positions held by the banks as of July 15. And when I look at the change column, right, I want to look at the change column. I want to see what was the biggest shift over the last week. And I can see that starting from the top, let's see, going down, 14,000 positive for the euro. Okay, not huge. 30,000 positive for the US dollar, Japanese yen. Okay. 22,000 for gold positive, 95,000 negative, and that's for oil. Pretty important. 62,000 negative, and that's for the S&P 500. Interesting. And minus 44,000 for bonds. Okay. So the ones that stick out to me are the big numbers, and those are the ones that I want to take a look at, a special moment to take a look at and see what is it that, you know, really sparked those big moves. Is it in the middle of creating some demand? Is it in the middle of creating some supply? And when I'm saying is it in the middle of creating a supply or demand, I'm really asking myself, are they about to make a serious move somewhere? Okay, are they preparing to take price up, you know, through a supply area to a supply area? What are they doing? Why is this big move that we see in the positioning, why is it taking place? And that helps me understand better what's going on in the markets, the overall markets. Okay. All right, so that is that. Now let's get to the first one that we like to look at, and that's gold. So when we look at gold, what do we see here? Over the last few weeks, we see them increasing their long positions, okay? Look at that, since May, actually, late May. We saw previous to that they were super aggressive. That was early in the year, okay? And that's throughout here. Super aggressive, and you see what happened with price when they were super aggressive. That's why I draw in these clouds, right? When you see a dark cloud of red or green around price action, that means the banks were accumulating a long position. If it's green, it's a long position. If it's red, it's a short position. So you can see on the weekly time, weekly time frame, this big green cloud on price. That tells me visually that the banks were accumulating a long position. This is why you want to be focusing on the non-commercials and not the commercials, because it's very likely non-commercials were acquiring short positions as price was rallying. And I'm sure you don't want to be acquiring short positions as gold price is rallying. You're going to find yourself in a big drawdown if you do that. Now, I know there's a lot of people out there saying, you know, but you're supposed to be focusing on commercials. All right, well, to me, that doesn't make any sense. If you're trading and you want to make money, you want to find somebody who's trading in the same direction as you and speculating in the same direction with you. And that's non-commercial. The commercials are hedging, so they're usually taking the opposite side of the direction that they think price is going to go. So you don't want to be doing that. All right, so we look at long positions, and we can see that they were super aggressive with long positions back in the beginning of the month, and that or beginning of the year, and that's what's caused the price to rally up. They took some profits on those positions up here at the highs. Okay, what was that? Living up in living up in Muskoka means that there's ants and bugs sometimes. I just got an ant crawling up my leg, a big one. Sorry about that. Anyways, so up here at the highs, they're getting back into a long position. So we got to try to understand what's going on here. Are they preparing to take price to all-time highs? Why are they reaccumulating a long position at these highs? So to put things into context, let's look at the bias. Okay, one of the ways that we see if the banks have a sentiment or a certain bias with price, we look at the coloration of the cells here. Okay, and what we can see is that if we look at the coloration here, it's somewhat bluish, somewhat greenish, but not really anywhere strong. Okay. And if we look below it, we can see it's somewhat bluish, somewhat reddish, a tinge of red, and then we got green down here, okay? So what does that mean? That means that when they were bullish, this is where it was here, okay? When they were taking profits, this is where they were here. And now they are neutral right here, okay? So this is telling me they were bullish, they took profits, now they're neutral. Sentiment is neutral. So they're not really adding long positions because they're thinking about putting price to the upside. They're just calming down with their positions right now, up at these highs. And what's interesting is that in our level 3 sessions, we took a look at the sequence that was playing out on gold, meaning we were looking at the multiple time frames and looking at the lack of significant buying that was taking place on the charts. We saw some buying that was taking place, but it wasn't anything very aggressive, wasn't anything very significant. And this was leading for us to come to the conclusion that momentum is drastically shifting from being upwards to sideways, potentially to the downside. Not just yet to the downside, because when we take a look at gold, we can see that, let me just open this up for you. We can see that on the daily time frame, you see these circles here with green, right? Circles in green. This was significant buying that was taking place, okay, here by the institutions, here and here. So unless price makes a significant move to the downside here to break through this demand here, then downside is not going to take place, okay? We can't come to the conclusion that a larger move to the downside is going to happen if this area doesn't get removed. This exact area needs to get removed, okay? Not this area here, not this area here, okay? This area right here has to get removed, right? So when you know the institutional buying and selling that's taking place and you can locate it on the charts, then it's very easy to know if price is going to head in a certain direction because of those key zones that they came in with their buying or selling. In this case, with their buying. So that's a key zone there that they came in with some buying and it is holding. So as long as it's holding, we should not be expecting any significant move to the downside. But like I said, the buying that's been taking place hasn't been very significant, which is leading us to suspect that there's a good chance that we might see a breakdown in price and price start heading lower. Okay, now oil. What do we see when we look at positions? Well, we look at long positions and we can see that they're very cooled off, and they've been cooled off for quite some time. So really not focusing on long positions recently. Shorts, on the other hand, they went into really cooled off territory the last several weeks, right? And that's probably because of the news about what's taking place in the Middle East. You got that big spike in price. They offloaded a lot of their short positions, but that just brought price right back down to where it was pretty much, okay? We have institutional demand right here. As you can see, price is falling short of that institutional demand. I wouldn't personally want to be trading when price is sitting in the middle here, okay? If it's not in demand, I wouldn't want to be buying, okay? And we also have institutional supply that came into play right here. And so we have forces pushing downwards and we have forces pushing upwards. So which one's going to win? Don't know. All right. Let's wait for price to come into one of these zones and actually produce something in terms of structure on the lower time frames, showing us whether or not they want to continue selling or showing us that they want to start buying at these demand zones. So far, we're not seeing anything like that, so we move along. US dollar, interesting one. Very interesting. The US dollar has recently contacted some demand, and when we take a look at long positions, you can see that they're cooled off. So what does that mean? Well, that means they haven't started accumulating a long position that of any real significance as of yet. If you look at the short column, you can see that the sales are pretty much red. They're aggressive. And why are they aggressive? Well, as you can see, price has been declining. All right. And so for price to drop, you need short positions to be added, okay? And this is what happened. Short positions added, price drops. They take profits, then short positions added, price drops. So this is what has been taking place now. Adding shorts to cause price to drop. Now opposing demand is contacted. That tells us that over time we should be expecting a move to the upside. And we'd like to see that confirmed in the positions here. Okay, right now long positions are very cooled off, but soon I suspect we'll see them starting to add to their long positions, and the positions will come out of cooled off territory into a more aggressive state. All right, so this is what we're going to be watching for. The supply and demand dynamics is suggesting the move to the upside is going to take place. We just need to confirm it when we look at the CFTC data, and it hasn't confirmed that just yet. All right, so let's move on to the Aussie. Aussie, we have supply in play. It's been in play for quite some time, and you know, short positions are the ones that the banks are focusing on right now. If you take a look at short positions, right, it's been the main focus of the institutions for quite some time. We've been talking about this over several months, that we've been examining this pair and showing you how they've been really focusing on just the short positions. So they acquire shorts, it causes price to drop, and then they close off their shorts, which what causes price to rally. Okay, as you can see back here, in the early part of the year, they were aggressive with shorts only to offload them, which caused price to rally. And if you can see here, when they were aggressive with shorts, it caused price to drop down into demand. And then when they took profits, it caused price to rally. Okay, not a huge rally, but still, we got the rally there. So interesting, now we see 95, 97, 96. We see a slight increase in short positions, and that could be in preparation for a move to the downside. In fact, I suspect that's what's going to happen. When we look at the supply and demand dynamics of what's taking place on the charts, we don't see them setting up for a drop, because what would have happened was we would have seen some significant selling coming in on the lower time frames, and we're not seeing that. And we've been watching for it, but we just haven't been seeing that. So no very specific short signals as of yet. There is an area that I pointed out to members yesterday that could be a really good area for shorting. It provides the smallest amount of risk for the biggest amount of upside. So we'll see. We have alerts set, and we'll see if those if that trade gets triggered. Could be a really big winner. Everything's in line for it. We got supply in play. They're starting to accumulate a short again. You know, everything's in line for it. So we'll see how that plays out. With the dollar about to rally, you know what I mean? So we have the US CAD now. And US CAD, as you can see, they were aggressive with their long positions back here. Okay, oops. Aggressive with their long positions back in May, June. They were aggressive with their long positions back here, beginning of the year. And look what happened, okay? Right? Accumulation. Aggressive with their long positions, caused price to rally. And then here they were aggressive as well, but they were dropping price, which was very interesting to me. You typically see this. Look at short positions, very cooled off. You see the coloration of the cells here? That means they haven't been focused on short positions for quite some time. The closure of long positions is what has caused price to drop. Okay, so now we're here at the lows. We're not in any type of demand, nothing. So be very tricky to trade this one because, well, frankly, they're in profit taking mode. When they're in accumulation mode, we can see very nice structures being built on the multiple time frames. But when they're in profit taking mode, you can't really see that. So I suspect we're going to see the US CAD rally, but that's mainly because of what we're seeing on the Dixie chart. Okay, so we won't go into anything more on that one. We'll go into the US Swiss. Again, really quickly, we have the Swiss with demand in play, demand in play. We're watching for a long signal. It could be produced because unlike the US CAD that has no significant demand zones in play, this one does. All right, just like the US dollar index. So going to be looking on the chart for long trades on this one. Sentiment is bullish, as you can see with the coloration of the cells. It is green, so that means they are bullish, and so that's the direction that we want to trade. Euro US dollar, interesting one, man, interesting. Take a look at the Euro US dollar. Look at the long column. Look at their numbers. They're at 242,000. All-time maximum size is 266,000. We're right there. All right, we're right there. Okay. So what does that mean? Well, typically what it means is that when the banks reach a size that is near their max or at max, about 90 to 95% of the times they're going to sell off on those positions, which is going to fuel a move in the opposite direction. So if they sell off on long positions, it's going to fuel a move to the downside. Sell off on short positions, it fuels a move to the upside. So I'm watching for that. Okay, I'm getting ready to enter into a short trade because it looks like that's going to be setting up. We're just waiting for the technical setups. Okay, because when institutional demand zones are still below price, we don't want to be selling into institutional demand because we don't know if they want to continue buying at those demand zones when price gets down to there. Okay, because they could take it from 242 to 250, then 255. 260, 266, maybe 270. They surpassed their previous all-time maximum size. They could do that. So we don't want to assume that just because their long positions are aggressive that they're going to start taking profits now and it's going to fuel a move to the downside. We got to wait for institutional demand zones to be removed first, because then that will tell us they're no longer interested in buying, at least on that time frame that those demand zones are removed from. Okay. So over time, I suspect this one's going to drop. We're just waiting for the technical setups, okay? Pound US dollar, same thing here. They're not as aggressive as they are with the Euro US dollar, but this one will follow suit. We're watching for short setups on that one. US dollar, Japanese yen. I told you they were going to take some profits on their short positions, and this is exactly what they did. Remember when they reached 204,000, which was a new all-time maximum aggressive short position? I said they were going to take profits on it, right? This is where they did it, right here, where they accumulated, all right, the big position. And here's the profit taking, causing the move to the upside. Okay, I told you. Only thing is, I was looking for a long setup because I knew the move to the upside was going to happen. I was looking for a long setup, something to enter into a long position, and I was having a very difficult time doing that. Let's go over to the US dollar Japanese yen chart. All right. The initial trade signal we had was here. That worked out well, beautiful, as price came into demand. I knew they were going to take profits on their shorts, which would fuel a move to the upside. That's what happened. Price came back down, and it's been very difficult to locate a trade signal ever since. So I haven't entered into a signal. So we're waiting on this one to see how it's going to play out and what's going to happen next. I suspect they will likely continue to take profits on their short positions. We have the dollar hitting demand, right? So there's likely going to be that bullish pressure coming into this chart. So I'll wait and see how high it wants to go up, but I suspect over time, we're likely going to see price head back to the downside. All right, so let's go to the Kiwi. Kiwi, same thing as what we're seeing with the other charts, where we expect the euro to rally or the euro to drop, pound to drop, Aussie to drop. It's likely this one's going to drop. The positions are not telling us that. If you look at positions, long and short, the coloration of the cells are blue, meaning they're very neutral. So it's not really giving us any indication, all right? S&P 500, big increase in shorts. That was happening at the highs here. We had some significant demand be created here. 2 candles to the upside, taking a pause, increasing shorts. Yeah, you know, we are suspecting that there's a very good chance we're going to see a drop in price. And so the fact that this is bearish in positioning is pretty interesting to us. We're just waiting for the technical setup. And we're waiting for the smaller time frame demand areas to be removed to give us that indication that price is going to drop. And once it does, we're going to be looking for long signals on the chart. Because I think a big move is coming on the S&P 500. Big move to the upside. It's just not there yet. I think a nice drop is going to happen first. Silver looking pretty good. I think it's ready for a sell-off. We're hitting areas of supply. So we're expecting a move to the downside soon. As you can see, here's the supply. We just fell short of it, just a little bit more to the upside. But once that gets hit, I suspect we're going to be seeing a move to the downside. So this is another reason why I suspect gold is going to be dropping, euro, pound, and all that other stuff. And as you can see, they got somewhat aggressive with their long positions. So it'd be a good time for them to start taking profits on their long positions. Even RSI is giving us an indication that they're a little bit overbought. So overbought in RSI, aggressive long positions when you're looking at the CFTC. Supply and demand indicates that we're hitting a supply zone. This all equals a move to the downside is coming. All right, ladies and gents. Hello, everybody. Nice to see all your comments in here. Beautiful. All right. Well, I think that was good. I think I filled you up with a lot there, right? There's a lot to take in there. And yeah, I'll leave you with that. Thanks for joining me today. If you want more information, you want to get new alerts to trades, analysis you won't find anywhere else, come join us in our Telegram. Link in the description. Hit the like and subscribe. I'd appreciate it. All right. You take care. Have a good one.